Good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, 17th of July, 2026. So, as we were talking last week about upcoming events, macro events and crypto events in this week, let's start from that. This week was the release of the inflation figures, the CPI, consumer price inflation figures that again were eagerly awaited for to determine expectation of interest rate rises or not. So noises have been made by the Fed that are looking at increasing interest rates. And now we had, over the past couple of weeks, we had, first of all, the non-farm payrolls, NFP release that showed very weak job figures. That again took a little bit of pressure from the necessity of raising interest rates, because raising interest rates will have a bad effect on the job market. And with news from this week, again, the inflation came down at lower than expected levels, which again speaks towards taking pressure off the authorities to lower interest rates quickly. Let's go and have a look. Let's have another look at that. So let's refresh my page. Sorry. So these are the CPI figures that came in on Tuesday. As you can see, the core CPI has gone from 2.9 to 2.6%, expected at 2.8, so 0.2 lower than expected. And the actual official CPI year on year has gone from 4.2% the previous month to 3.5, and we were expecting figures of about 3.8%. So this is kind of the effect of oil and the lowering of the price of oil. And now that the oil is into the system, so the high prices of oil, then anything lower than that would actually lower inflation going forward. So I remind you that the two things is inflation and jobs are the double mandate of the Fed. So where before they were, as the new head of the Fed was elected, and they had the first meeting last month, we were looking at. I'm sorry, just a second. I need to change my mouse. I've suddenly run out of batteries. Okay. Just 2 seconds. Okay, I was saying, so the double mandate of the Fed, or keeping the labor market working well, and at the same time keeping inflation around the 2.5% figure, which we have been above now for the past couple of years, at the very least since since COVID caused an increase of prices in everything, that as it was really elevated to begin with, and it kind of like it came down and then it went back up. So at the moment, the battle is still to get this rate under control towards like under the 3% range. So this move of lower than expected inflation, it's positive, and it then has changed expectations from everybody that the interest rates would be cut. I'll just show you here on Polymarket is where people kind of like trade trade expectations. Was given a 95.7 probability that the Fed will leave interest rate unchanged at its July meeting. Now, this is just a market expectation, but it is significant in a way. These kind of markets have taken more and more prominence because people support them with their own money. They either bet one way or another. So when you have to put the money behind your conviction, it's not just your word or what you think, but it's also what you will support with your funds. And I would say almost like 96% of funds in this Fed decision are going into like the unchanged result. Okay, carrying on. I said there isn't that much going on this week, apart from we had the overnight rate from Canada that was kept steady again at 2.25%. Against, Canadian economy and US economy are quite closely linked. So it is also a good sign that they haven't raised interest rates. And the other part of inflation as well, which was the producer price inflation, again, came in at lower than expected numbers. So it was at 0.6% month on month last month. This time is like minus 0.3%. Let me just go and check on here. There are like a little bit more precise figures on that.
Yeah, there we go.
So we are the jobless again. Also yesterday the jobless figures came out. We'll look at this in a second. So the initial actually jobless claims are quite still around the 200,000 figure with the continuing jobless. So this is like long-term unemployed. They are still around the 1.8 million, and we've been between 1.8 and 1.9 now for the past couple of years. So, but the significant part of this as well is that after sending back a lot of immigrants to Mexico and other countries and South America, especially in big numbers, you would have expected these figures to actually be a lot lower. So the fact that it hasn't gone lower is also speaks of weakness in the job market, even with much reduced supply of labor. The numbers have stayed pretty much the same over this time. Something to be noticed as well, that slowly the 30-year mortgage rate, it's coming down. If you remember a few months ago, it was over 7%. Now it's at 6.5%. Obviously, in the US, where a lot of these are the basis of most mortgages, obviously it didn't have an effect immediately because it only takes effect when you have to renew your mortgage. But just bear in mind, though, that we are renewing mortgages now at 6.5%, where before COVID, we were literally between 1% and 2% interest rate. So we still, although this rate is coming down, which is a positive for the housing market, and we have seen a recovery as well in the housing sector. At the same time, it's on the general economy. Any mortgage renewing at this rate puts extra pressure on the person that's renewing at much higher rates than the previous mortgage and then they signed. Let me just go and have a look at Wednesday's figures that we were looking at. Cool, PPI year on year. So again, the PPI year on year is, again, as you can see, was 6% last month. This is the numbers for June. So it was 6% in May. It was expected to go up to actually 6.2%. Instead, it came down to 5.5%. So we're talking about both consumer prices and producer prices are still obviously going up because the numbers are still positive, they're not negative, but the rate of increase is actually coming down. So again, inflation numbers, consumer, producer pointing in one direction, job figures coming in are very weakly. So this is why the expectation from prediction markets are like in a vast majority, on 96 out of 100, are expecting rates to stay the same. Okay, so let's have a look how this expectation has been taken by the markets. Let me clean this up a little. And let's go and have a look at the S&P 500. So I'll say the S&P 500 has been literally from the beginning of June, from when it hits a new high, is being kind of like going sideways. We've had a couple of days of kind of down move, but it's nothing major. So we're still very close to the all-time high here. We're only about like 2% down from the previous high, so it's nothing really. So there's no panic here from on this point of view. If we go instead have a look at the Nasdaq, I've got the QQQ here, which is the ETF that basically follows the Nasdaq. It's a little bit more of a downturn from this from the S&P. Like it's more, so this is more technology based. As you can see, this is the pre-market price, so this is why I'm aiming at this point. So it's now like 7% drop from the top that was reached, like the same as the S&P 500 at the beginning of June. Okay, so and this is kind of like a little bit more worrying. Let me just remove that. It's just slightly more worrying because we almost like seeing the beginning of a pattern that is not completed yet, but as you can see, we're very close to this previous bottom here. So if this legs, which at the moment today is expected to open here, okay. Now, if actually this it actually opens and kind of closes the day at below this point, then we would have the confirmed on a daily chart, a confirmed downtrend. Okay, because the definition is to have three segments with like a high, a lower high, a low, and a lower low. Okay, so we're now waiting for the third segment to close, and it's clear as well here when you look at it on a weekly chart, it's the same thing. Okay, so we're waiting for this point to be broken. Okay, and at the moment, this is where the market is likely to open today. Okay, so we're not that far away. So the market is at the moment is around 693, and the lower was 685. So it's very, very possible that we that we start the beginning of a downtrend. So what would then be the expectation? That's the question, from investing. If we have a confirmed downtrend, at least this is the beginning, because it's the minimum that we need to say, well, there is a budding downtrend forming up here, which could be the first indication. Okay, so the confirmed third segment is one. The second point is like a double top that looks like has already formed. Okay, the third, the most important one, to say really we are now in a on a Nasdaq, on a bear market, we will need to break this point here. So we're still very far away from that, but on a short to medium term, we could have by tonight a confirmed beginning of a downtrend. So if that happens, what would be the expectation? So let's do it just a second, just like for some of you, they have done trading before, then maybe this would be familiar. For others would be double Greek, but you get used to this sort of language. So if let's say that today we closed here, okay, then the expectation would be for this pattern to continue, but first there would be a retest. Okay, a retest above this line. Now, the first place that it's obvious, if let's say we had a confirmation, like a closing price beyond that point, the first place that you would go and have a look at would be this. Would be this sort of movement, and in particular, depending on how precise you want to be. But this is like a it could become a wider supply area by the end of today. A little bit more precise, you could actually go and narrow it down to that point between 710 and 725, or even, you know, narrow it down even this much by about 10 point with 717 and 726. By the time you place your stop loss, you will have a 10-point gap really, which would qualify that risk. So this is what normally happens when there is like a trend forming. There's always like a retest at some level that could be, the safest part to enter. Let's say a short trade would be this area, and somewhere around this area. So the supply area that I've highlighted is nested within what is called like the the sweet spot, looking at from a daily chart perspective point of view. So without going into like intraday and anything more, anything shorter than that. So this is basically the way that we analyze this is by finding the rebound, from initial drop, and this kind of like a rebound that didn't quite go higher than the previous one, so it failed, so to speak. So when price actually breaks and goes lower, then somewhere in this area there is an opportunity to sell. Okay, but also bear in mind, so there's no guarantee that anything that will work that way, because we are still on a longer time frame. So yes, we will have on the daily or on the weekly a starting downtrend, but it is very possible, like we see in this case, to have two trends in the chart at the same time. So this is the overall long-term trend at the moment. That is the one that is still dominating the market. Okay, so that's at the moment the uptrend. I should do in a different color, so at least you can see that. So that's the uptrend in green, and that's the downtrend. We'll do that in red. Okay, as you can see, the uptrend is a much bigger move than the downtrend. And for this to become dominant, it would need to come below 555. Okay, so very, very long way. But sometimes, it's if you think that the price has started to go down, and you might want to try and get on the early part of the move, which is the riskier part, and you'll take a chance on the early signs of something happening. And also, if we close behind this, we can see that there's a reversal shape forming that looks like an M. Can you see like an M on this side? And if it was like on the other side, it would look like a W. If it was like a reversal on the upside. So two things in the chart at the same time. There's still a battle going on between bulls and bears to see which one will be the dominant force. At the moment, this is not even formed yet, so it doesn't exist at the moment. We are standing here as of now. Okay, so we're looking at the future and what could happen in the next few hours. So at the moment, the facts saying we are in an uptrend. There is maybe a downtrend forming as well. So if that happens today, we will have two trends in the charts at the same time. The downtrend will be the immediate and short-term trend, which could then grow up, let's say, into a major trend if it moved down by 150 points. But obviously 150 points, it's a lot. It's 20% roughly of where we are today. So it's a lot to wait to get confirmation, which is fine if you are looking at a long-term strategy, but also I'm kind of like keen of protecting if you actually have invested from the 300 and 400 levels, you don't want to give away like half of your gains simply because to wait for confirmation that this is actually going lower. So at this point, if you are nesting kind of like a good profit in your account, it might be sometimes it's good to take some profits, okay? Because we don't know what will happen, and it's always possible to to enter the market back in a few days or weeks or months. Okay, in terms of let's have a look at other things that we need to discuss. So we talked about the inflation CPI. Also, we had an unexpected increase in interest rates in South Korea. That where they raised the rates by 25 basis points at 2.75%. So South Korea as well is one of the most active markets. From the point of view of Bitcoin, let's go and have a look at this. So we are still again the downtrend is still dominating, as you can see. The thing that we can see, go back to the daily maybe. So there is like I say quite like a pushback happening at these sort of levels. So anything below 60,000, as you can see here, you can see the kind of there is a buying activity coming back into the market at these levels. Okay, so really it's kind of the lowest close that we've had so far. It's here at 58.5. Okay, so that tells you that at least between 58.5 and the what we have 57.5, we had quite a lot of capital coming in. And you can see here in the charts like 1, 2, 3, 4, 5, 6 days. Although the price didn't really shoot up, but still we have 6 days of positive growth after hitting the new yearly low. So it is kind of like a positive sign in the sense that the big buyers, institutional buyers, are coming back in at this price. Again, it doesn't mean that we're not going to make a new low, but it means that there is willingness to buy at certain levels. Okay, so that it's a positive sign. Obviously, we are still at the uncertainty of surrounding the Iran war is still affecting the markets. But it is nice to see that this movement in Bitcoin has happened even after the kind of the resumption of the hostilities. So we're still at pretty much the levels that we were at the beginning of that activity. So at least if anything, Bitcoin hasn't really dropped since that happened, which means that there is resilience in the price on Bitcoin. Now, and from the point of view of on-chain view, the level of Bitcoin on exchanges is still very low. That means that again, we're talking about whales, big owners of Bitcoin, are actually still taking the Bitcoins off the exchanges and putting it into cold storage wallets, because it means that they're not looking to sell their stash of Bitcoin and they want to keep it safe. So it's important. That is an important metric, because obviously if you want to sell your Bitcoin, normally you deposit it where there is most volume, and that is normally on Bitcoin, on exchanges like Binance, like Coinbase, etc. Now, the most important thing that we've been waiting for is this Clarity Act. So the Clarity Act, there is now today, there is a Financial Services Committee meeting, so where they're going to discuss the Clarity Act again. But if we look on prediction markets now, the expectation of this being signed into law in 2026 is dropped all the way down to 35%. So it's almost like seen as an off chance. It obviously is going to go into law at some stage, when it's important to determine, when there is like a fresh wind coming on the side of crypto that pushes prices up. Because, as Jonathan can tell us, just the big companies, the Apple, the Google of this world, they already have, working crypto wallet and systems that can activate at the push of a button, but they are waiting for regulatory clarity before they do that. So expectations are, or things are happening on the background, but until we know what the rules of the game are. And again, who's going to look after the cryptocurrency? Is it going to be the SEC? Is it going to be the CFTC? It's still like under negotiation. And until that comes in, we will still remain a little bit in limbo. I remain of this similar expectation in the sense that many things are pointing towards the same direction, which is towards the last quarter of the year, because it's not just what's going to happen in the Congress as we have described right now, when this law is going to get passed, but it's also what the cryptocurrency community is expecting, like calculating the 4-year the 4-year cycle of Bitcoin, and both in terms of how deep it normally drops. Go maybe onto a weekly chart. Let me just remove the drawings. So as you can see, when did we actually hit the bottom of each cycle in the previous cycles? So it's pretty much on a 4-year basis. So the first time at the end of 2018. I'm not quite sure exactly when. I think it was here. So here it was like December 2018. Here is November 2022, between the beginning to the end of 2022. So let's say here, 7th of November. So again, people are looking at these and thinking, okay, look, pretty much every 4 years, we hit the bottom and then we start growing again. So what's the expectation here? From 2018, so December 2018 to November 2021, it's almost like a 3-year period of, obviously, still very volatile, going up and down here, going up from $3,000 to $13,000, and then back at 3.5 and up to 70,000. So incredible moves. And same here, from 15,000 to 70,000, and then down to 48, and up to 120 plus. So it is quite a lot of move, but then the expectations are that, okay, around the same period of 4 years from there, so December, November, so we're talking around, October, November, we probably will be hitting the, so if it was the same as 2022, so around this time, October, November, we might be hitting the low or this cycle bottom, or it could be somewhere. Sometimes we might already have hit it and just retest it. But in terms of percentages, between the the height of the previous cycle and the low, sorry. And the low of the next one. You have to be a bit more precise, and this is important. So here there's a 21% drop from the previous cycle high to the next cycle's bottom. And here, at the moment, we are looking at 16%. So at the moment, we already had a 16% drop from the previous cycle high. If we were to hit the same as 21% as we did last time, so I need to undo this. if we had to see the same percentage, then that would take us to like the mid-50s. Okay, about 54, 55,000. So could this happen? You know, there are a few weeks left. Yeah, 1, 2, 3, 4, 5, 6, about 10, 15 weeks left between here and November. So could we then have another low, lower than the 57.5 that we hit so far? It's very, very possible. Very possible. So we can see the kind of the thing that comes to attention here, the lowest close that we've had since breaking the previous cycle high was this one here. Okay, so around the 55,000 mark. So I would expect, again, even when we were pushing up at that level, we didn't really go a lot lower than that. So we pushed down a little, but we nothing had enough conviction to finish the week at that level. So it maybe stayed for 2 or 3 days, but then the price went back up very quickly. Okay, so the same thing I would expect around this level. And we have seen some metrics that we can see, for example. You know, the Bitcoin supply at the moment is at a loss. Okay, so at the moment we are standing at 46% of Bitcoin supply at loss. So people are holding almost like half, 46% of people that are holding Bitcoin are holding it at a loss, and you know, 54% are holding it at a profit. Now, levels of above 40% are indicated. Can you see here? This was the previous cycle. The previous cycles were kind of indicating pretty much the bottom of the previous market, and levels above 40% have generally indicated positions close to the market bottom. Okay, so we have, during this cycle, we actually went above 50%, to above 54% a little while ago. At the end of June, we were about 54% Bitcoin supply at a loss. So we might already be close, or we might already have touched the bottom of the bear market for this cycle. Also, we'll look at, sorry. So we can see this is the average holder of Bitcoin now sorry, not holder. The last time any Bitcoin in circulation has moved, the average of that price is about just short of 53,000. Okay, and that again, it's another metric that, as in history, has indicated the within a very close range at that point, has indicated the bottom of the bear market. So we got like more things that point into the same direction, and again with also I would say the Clarity Act hopefully coming into being, and a certain drawback. We generally, with each cycle, becomes less and less in percentage terms because the market is more mature. But it's, you know, I would say it wouldn't be a bad place to actually get engaged with Bitcoin for the next cycle at, you know, between the price where we are now and 60 or 50, 58,000 is not a bad place to get engaged, because we probably have an extra 3 years of positive growth from here, from let's say the end of the year. Okay, so this goes from October 22 to September 25, and the previous periods went from, again, December 2018 to November 2021. So you see what I'm saying? It's now you will be buying at you could be either buying at any price now or doing some dollar cost averaging over the next few weeks, and that will bring you to buy at an average price around the market bottom, because pointing it out exactly, it's almost impossible. But I'm saying that the kind of the price activity it's showing kind of like tiredness as well. So there isn't any strong movement on the way down. Can you see here as we went sharply down once, sharply down twice. Now this move here, which is the current one, he actually hardly made a dent at all. It's, look at the difference in kind of like new drop. That's the previous one. And this is the actual one. So can you see how the kind of the strength of the down move is slowly exhausting? This is that we dropped this much new price drop before before a partial recovery, and now this move just barely went lower than the previous down move. So again, it's talking about the pressure on the downward pressure weakening, but there isn't at the moment no strong upward pressure that's actually taken its place. So that needs to be kept into consideration. Now, other things worth of note. So this is the crypto ETF performance. As you can see now, we got some green figures that started to appear back after we had sorry, let me just get this out of the way. Can you see that for kind of May and June, it's been really almost like a bloodbath in terms of ETF outflows from all the crypto ETFs, obviously Bitcoin and Ethereum being the majority of that. As you can see down here, the green is Bitcoin, the blue is Ethereum, and then this like thin line is all the other, XRP, Solana, and Hype, which are tiny compared to the Bitcoin and Ethereum volume. And we can see that we had positive inflows for Bitcoin, XRP, Solana over the last few days. I've looked in particular, the most important one obviously is the Bitcoin ETF, because we've got the biggest volume. And can you see like this week, there was still outflows on Monday, but then Tuesday, Wednesday, and Thursdays we had funds flowing back in. Pretty much, I mean, this week we're looking at almost 180, 287, 350. Still slightly negative on the week. So depending on where we end up today, but there have been, after the drop on Monday, there have been funds coming back in for the rest of the week, which is interesting. And just like I just remind you that it's this is like slowly after the kind of the 4th of July holiday, so that normally affects the volume on the markets as well. So let's look for a few bits of crypto news again. We'll look at the building blocks, I'll say, why we're still looking at crypto and why we think this is going to be a big thing in the close to immediate future. So this is talking about, you must have heard lots of talk about RWA, real world assets. And this is where like Ondo Finance is one of the major players into this market that works with companies to tokenize security, bonds, and all type of different real world assets. So they just announced an agreement with one of Japan's leading financial conglomerates called SBI. So they announced a partnership to tokenize Japanese equities and also distribute the other tokenized products from Ondo, which are mainly like US products, like again stocks and funds and bonds. on using the financial ecosystem from SBI. So that means that they're going to be actively marketed in Japan. So Ondo will tokenize Japanese stocks and distribute them through the SBI Group channels. And this is like interesting as well. Settlement will occur in JPYSC, which is a yen-denominated stablecoin that is regulated under Japanese law. So this is like a much stronger legislation behind it than at the moment you have with USDT and USDC. Although this is like, obviously, it's a tiny percentage compared to the volume of the US dollar stablecoins. Still, it shows you that we are being serious here. This is Japan we're talking about, one of the major economies in the world, and probably the country in the world with the highest percentage of savings. So if again these kind of initiatives are then widely used, that again brings a lot of could potentially brings a lot of funds, but not just of like investors funds, but institutional funds, because that gives it an institutional setup that can be used by Japanese equity funds and pension funds to start taking a position also in cryptocurrency. Okay, so again, it's one of the tiny bits of news in a way that can again keep building the wall one brick at a time. So this is what we were talking about before. Again, 40% of long-term supply and the loss at the moment. But Fidelity, again, so these are the guys that were rubbish in Bitcoin 4 years ago, by the way. Okay. Now, kind of Fidelity, BlackRock, anybody else, has got like a huge teams that are analyzing the crypto market, and they are obviously talking about it. So what do they say? Nearly 40% of the supply is now at a loss, a level that's previously aligned with Bitcoin bottoming process. The key question is history starting to rhyme? So sometimes it's like these predictions are almost like supporting themselves, because everybody expects something to happen. They adjust their behavior to the expectation that will happen, and then obviously it will happen because everybody's behaving in that way. So they say in the past, Bitcoin bottomed out when supply and loss hit around 46 to 56%. Okay, in 2022, Bitcoin marked a bottom near 16,000, and the supply and loss peaked at 50%. So during this cycle, we've already gone beyond that. So we already peaked at levels above 50%. At the moment, we're standing at about 46.5. Okay, so we'll just yeah, don't worry, I don't need to bring that chart up again. Okay, so that's it from this one, and a few more. So again, another things from this is injected protocol. The token symbol is INJ. Say it has filed for the SEC transfer agent registration. So that's to bring then security ownership records on chain to tokenize assets. So again, we guys slowly we're moving into being able to trade, buy and sell stocks, funds, securities 24 hours a week, 7 days. Sorry, 24 hours a day, 7 days a week. This is what happens when these are put on the blockchain. So at the moment, it's still, again, it's a small percentage of things that are on the blockchain. But so these news are coming every week. I'm just bringing 2 or 3 to you. But if you actually read the crypto news, you'll find more and more of this type of news that are bridging cryptocurrency and traditional markets. And this is where, just imagine, cryptocurrency market is like 2 trillion. The share markets is 20 times as big. Okay, so even if a small percentage come into the crypto world, it will be huge in crypto terms, even if it's going to take years for then crypto to represent the majority of real world assets, exchange and trading. It's a step in the right direction. Another interesting news is the first line from this. So Uniswap, which is the largest exchange, decentralized exchange, with the first, and still they have a huge reserve of a huge treasury. They're still under question. I think if you hold Uniswap tokens, eventually at some stage they might decide to either invest this treasury to develop their product, or to maybe sometimes to return some of that to token holders. Okay, but Uniswap is a huge exchange as from a DeFi point of view, and they've launched their trading tools, including dollar cost averaging, indexing, and copy trading bots via Uniswap API. So to do these things now, you have dedicated software, and generally if you want to do that, you do it from an exchange, whether Bybit or Binance or any other KuCoin or any other exchange, and you maybe want to use it. Well, now there is a possibility of doing it completely decentralized without running the risk of having a fund in an exchange. Couple of things, and then we'll stop for today. So we're talking about the Polymarket expectation. This is another news about Japan, coming from CryptoQuant again. Japan's crypto market enters a new year, so financial reform opens the door to Bitcoin ETFs. So again, having Bitcoin ETFs available in the Japanese market as well would allow institutional participation. And again, I remind you that Japan is one of the largest countries from the point of view of savings. So they have lots of funds. They are ready to be invested into investable products, and that would make the Bitcoin ETFs as an investable product in Japan. So again, another step in the right direction. So this that in a second. Now, crypto exchange Knaken, which is like a Dutch cryptocurrency exchange, it's been declared bankrupt by a court in the Netherlands. So after 7 million of customers' funds vanished. Now, so again, this is like problems that became more apparent since the MiCA legislation came into being here in Europe. So I just wanted, obviously, you probably never heard of this. It's not Kraken, it's Knaken. But it's just to remind you that funds in a cryptocurrency exchange are not 100% safe. Okay, it's a company. Company can be badly managed, and it could end up in bankruptcy. And if you end up in bankruptcy and you got funds, crypto funds, those funds are not your own. You are just a creditor. Okay, and you are at the same level as the people that maybe deliver sandwiches to their offices and haven't got paid yet. You're at that same level. The first people to get paid would be the employees. Okay, they will take out the funds, and then there are secured creditors, obviously, if there are any, will come next, and then you would be an unsecured creditor. So often when these things happen, what you get back is next to nothing compared to what you have deposited. So this is what we're talking about. It's your funds are not your own until they are in your own wallets. Okay, so keep it. It's fine to have funds on an exchange when you're actively managing them and you're buying and selling, etc., because that makes life a lot easier. But if they are just for safekeeping, it's a lot safer to to have them in your own wallet. And the last bit, and then we can ask Jonathan as well to come in on this one, maybe. I don't know if obviously if you've been on things this week, Jonathan. This is interesting what Charles is announcing. They're saying that now Plutus smart contracts can now verify. Plutus is the Cardano's programming language. Verify thousands of signatures now natively without needing to actually send the verification off chain. and doing it directly on chain with having predictable execution costs. Jonathan, do you care to elucidate a little bit more on this?
Yeah, I mean it's a cryptographic set of primitives that are being added to the Cardano blockchain. So wherever you've seen cryptography working on other chains, particularly Bitcoin was the first one. You've had a series of features roll out. Bitcoin's only feature really is storing wealth, and so its cryptographic primitive was added to Cardano last few years. And as we add new ones, we get a whole load of new techniques and abilities. And so this latest one is coming about. We've got a hard fork coming up in the next week or two, I think, something like that. It's been voted on positively by the community now. So every ADA holder gets to vote, participate in the vote, and then there's some blocks and balances in place, like stake pool operators have a special vote. But once they're all gone through, then that means that the software around the network's been upgraded, and these new crypto primitives are going to be added to the blockchain as a feature. And so one of those features is to do this new signing method that will give us the ability to sign hundreds of transactions at once. So it drops the price from per transaction by a factor of, I don't know, 100 or something like that. So it's a really suddenly a cheap way of putting together all your transactions at once, making it happen for a single cost, which is, yeah, it's just what you need. The prices are coming down in crypto of operation are coming down. The functionality is going up. And again, that's determining the arrow of time, the direction that the technology is moving, that adoption is moving. So it's a really good indicator from, bird's eye view on where we're headed.
What does that mean, Jonathan, in terms of speed of transactions?
So the new signatures that are in place aren't actually contributing heavily to the speed and scale of the Cardano blockchain. What is coming on with this hard fork as well is a technology called Leos. Leos has been talked about for years as this mythical beast that the Cardano devs need to slay. It's held promise for all of us for decades, and it's going to solve all our stake pool operator problems. It's going to make us hit 10,000 transactions per second, just like Solana. Well, it is actually going to do those things. So it's having its first technical achievements have been confirmed and working on the test nets. It's rolling out on the mainnet with this hard fork, and we'll have the ability to switch on the first draft of Leos shortly after. And Leos will give us a scaling factor again of, to begin with, thousands. So we're at the moment on Cardano, you can't really determine a transaction per second because within each transaction on Cardano, you're doing hundreds of transactions. Now, instead of just there being hundreds of transactions within a single transaction, you've now got thousands of those individual transactions. And so the speed will go up from, I don't know, 15 transactions per second, sort of similar to Ethereum, to a few thousand is going to be is the safe figure people are talking about. But we know that in testnet environments they've hit 10,000 very comfortably without switching on all the bells and whistles. So we've got all the capacity now with this upgrade to handle any scale of traffic that we've seen in all of crypto so far. So yeah, really, really positive news for
Right. Jonathan, this is something I wanted to maybe make it clear to everybody. I never really understood what happens on the that kind of like on the other side of the connection to crypto, like from the life of a stake pool operator, which is basically or like a owner of a node, or the people that in other networks. So the people that maintain the computers that then work on to keep the network. Now, can you just explain to everybody the difference from the kind of the hardware that it's needed to to maintain a stake pool in Cardano as compared to the same hardware that you need to maintain a node in Solana?
Yeah, it's a world apart. So even if you're just looking at the storage alone, on Cardano, you're looking at about uh, 300 gigabytes is a safe size of drive that you want. And of course, if you're running a responsible pool, then you need to have several duplicates of that set of data ready to go all the time, and you can swap hard drives in and out. So you're looking at server hardware, but we're talking for the hardware itself. If you're buying it outright, a couple of £1,000. For Solana in terms of storage, I haven't looked for a few years, but it's multiple terabytes of data for the version of the chain that you can run, outside of a data center. Um, Really, if you're looking at the full version of the chain, you're talking, I can't remember what size it is, but it's a significant size of storage that's needed because, this is partly because of the pace that Solana operates at. It's a really powerful blockchain in terms of we can throw 10,000 transactions through it per second and store all that data at once. The efficiency for Cardano comes in the amount of data that we have on chain, the way we're performing transactions and storing them, it reduces our overhead significantly. And so you can be a decentralized, distributed operator of a Cardano blockchain in node in Africa or India or Coventry, and Solana, you don't really have that choice anymore. If you're running a full version of the node, you've got to be in a data center with high volumes, high storage, and massive amounts of processing power and memory storage requirements as well. So it's a very different thing. I mean, with this upgrade, we have changed the amount of compute power you need for running a Cardano node. But in fact, the efficiencies we made in the last hard fork and the last set of nodes upgrades has brought us down so that effectively we'll be on a par. Our memory requirements have gone down from we were sort of hitting up about 32 gig memory bytes for a really safe node, and that's dropped down to realistically 16 you can run it at. I'm expecting when they switch on less, you're probably going to bump back up to 32 again. But they say that you won't even need that still. So we'll find out. But it's very possible to run home equipment, a version of the Cardano blockchain. Ethereum, Solana, these other guys, it's just not possible anymore. So it's a balance between cost, scale, and security. And so far, none of the chains have got it to the way that Cardano has. Now we've got that scaling really coming online with the top tier rapid chains as well. Yeah, I don't know how you compete with that. So it's really
Oh
exciting.
yeah, so
You repeat with the message, basically. Yeah.
I know that the last time I read something, I thought that the memory required for Solana was measured in petabytes now.
Storage, yeah.
Yeah, the
Yeah.
storage. Sorry, the
Yeah.
storage. Yeah. So I don't know what it would cost to actually buy that equipment, but we're talking about tens of thousands of dollars. It's not like something that anybody can, in the backyard can, spend a couple of dollars to buy to buy something hardware. We're talking about serious hardware.
Serious
Serious
investment.
hardware.
Yeah.
And
Yeah.
that's why there
Yeah.
are so many, there aren't that many, there aren't that many. It's not as decentralized as Cardano because simply the cost is prohibitive. And that's yeah. And it's one of the considerations, when you're going forward and you're thinking about big institutions using certain networks. Now, having a network that somebody has got the power to switch on and off, it's a big concern. So they wouldn't want like I don't know, a big bank like Morgan Stanley, whatever. They wouldn't want to have the financial network and giving the power to somebody to switch it on and off. They wanted to something that's like always on, and it's got history staying always on, which again, not many blockchain can have that record apart from Cardano and Bitcoin.
Yeah. Yeah. It's got a really good track record in uptime. And we have suffered, um uh, you know, bugs going into the blockchain, but because of the way that the software is architected, the nodes are architected, we've been able to ride out that without having to do any turn off, switch offs or anything like that. Solana has not proven quite as robust. So, at one point in the last few years, it's been off. every couple of months just to do a reset where everybody gets together. We all run a validator and we all say, okay, we're turning off now. Turn back on, everyone, quick, and then nobody will notice and it'll be fine. Cardano's never had to do that. We've just seen the chain. We actually had a fork where we had two versions of the blockchain running, and with our soft our yeah, it is a partition, a hard fork. We actually watched it throw away the bad versions of the blockchain that was based on the invalid transaction and come back together without anybody having to intervene. So there was, people changing the software from one version to an old one that had a bug in, one that didn't. But that just played out without anybody actually having to collude or anything like that. So really impressive. Everyone said it. Everyone's in crypto was standing back going, "Wow, that's actually quite good." So
Impressive.
yeah.
Hey,
Fantastic.
Jonathan, question
Yeah.
for you. Do you see, I mean, as maybe things move and some more larger institutions come through to use more, cryptocurrency, no matter what it is, do you see that there's issues with some of them? I'm just saying resource, without having these massive data centers. And, data centers are taking up, power, water, and all these other things. So I'm just looking at, is there something that could be an issue? And then I'm just wondering now, you've got a lot of people that are running nodes and stuff, but is it always going to be kind of that diversified of a lot of people, or can you see it kind of people kind of streamlining it and it becoming more,
Centralizing.
you know what I'm saying? They take over, and so you end up with down the road, you end up with this almost the same problem that you have now. You have all the big banks basically screwing everybody. I'm not going that, but I'm just saying, I'm just
Yeah,
asking the
no,
question.
I love your thought process, and it's spot on. So the challenge has always been that if you're running a big high volume cryptographic based database, which what blockchains are, you need high powered, robust hardware, and so for that you need data centers, and the number of big operators in the data center space are small. So you've got Amazon, you've got Google, Microsoft, and there are other names that aren't so off the shelf, but it's diminishing all the time. However, those guys are operators in multiple nations. They have data centers all over the world, and their service is providing hardware, not providing software. And so it's in their interest to make sure that they can't be shut down. We're probably over time now, but
Okay.
I just wrap up. So for example, Google has come into Midnight blockchain as a federated node operator. So Midnight is a new side chain, partner chain to Cardano. It's resolving back to the Cardano blockchain, and it's using its sense of source of security ultimately on the Cardano blockchain, but it's running parallel transaction sets on Midnight, private transactions, and they've brought in a federated set of node operators like Blockdaemon and Brave and Google. So Google are running their nodes, they're running the software, and they're running in their data centers. When the mainnet launches, the expectation, the hope is that they will actually move to a distributed, unfederated set of node operators, which will basically allow stateful operators like me to come in and start running nodes on the Midnight network as well. It'll happen later this year. And for example, now I know that Google's been running nodes. I know that their data centers are all set up for it, all good to go. And I could easily rent one portion of my stake pool in a Google data center completely comfortably. And Google, wouldn't even have to know about it. I can just run a single relay. I can have 4 running in Amazon. I can have 1 running in my loft. I can, it's the ability to distribute and leverage that big, Silicon Valley hardware, whilst running duplicates elsewhere. That means that it's impossible to shut down. Any government anywhere couldn't shut down Cardano blockchain. 2,000 operators, multiple nations, multiple data centers. Yeah, that's the distribution. That's the power.
So you see, Kim, kind of like in a way, if you think about sometimes in investing, you don't invest in the thing itself or investing like who provide, or you don't invest in in the dig, you invest in the seller of picks and shovels. And so this is what this is that's the business that they're in. They provide the infrastructure. They don't care what you do with it as long as you use it. They don't care what you do with it. So that's what they provide. Anyway, guys.
Okay, well, that's good. Good. All right.
Need to knock off today. So so have a fantastic weekend, everyone. If you want to carry on the conversation, join Jonathan's call. The Cardano Q&A question, because I think it's a really interesting subject. Thank you for bringing it up. And if you haven't got time today, maybe we can pick it up next week. All right.
Brilliant. Thanks, Luca.
Okay. Thank you, everyone.